I'm William Kumwembe with Business Time. It is a magazine program where we bring you major business and economic news stories making headlines, courtesy of Old Mutual.
Insuring and saving with Old Mutual means growing crops, growing jobs, growing a future. Creating mutual futures, your money invested for the good of all.
Coming up in the program today, we speak with Old Mutual Investment Group Managing Director Mark Kumwembe on responsible investment strides. And also in the program, construction industry laments rising cost of material. We have a report. Welcome, this is Business Time, and in our main story in the program today, responsible investment involves considering environmental, social and governance issues when making investment decisions and influencing companies' own assets. Albeit being a new phenomenon on the business landscape, the concept is perceived as a tool for sustainable business development without neglecting the social needs of communities. Old Mutual Malawi is one of the local firms which have embraced the concept fully. I caught up with Old Mutual Investment Group Managing Director Mark Kumwembe in this interview and started by asking him to give me a synopsis of the responsible investment concept.
Responsible investment is a new approach at looking at investments. So in the past, people would look at investments just from a financial outcomes performance rather perspective. So for example, one would look at the income statement and say, okay, this is how much money this business is making. The balance sheets, this business is well capitalized. They look at the cash flows, there's good dividends that they're paying. So based on these metrics, it looks like a very good business, so we can invest. But now there's a realization that these financial metrics are not derived on their own. There are other factors that do impact the financial metrics. So there's environmental, which is a physical environment in which we live in. There's social, and there's also governance. So I'll give you an example. A business is doing so well financially, their profit is very good, they're able to give out dividends, but they're doing that without compliance to laws. So their governance process is a problem. So although they're giving out money now to shareholders, the question is, what happens if they're caught up with the law? Will they continue to give out money? Now, responsible investment tries to integrate the financial as well as environmental, social, and governance so that it can help investors to make the right decisions. That's in a nutshell what responsible investment is all about.
In that context, why or how does the responsible investment concept matter in the world of business today?
It really matters because I think for one thing, what it tells us is that as an investor, you're trying to avoid surprises, both positive and negative. So the example that I've given, if an entity is not compliant to laws, but is currently making money, if they are caught on the wrong side of the law and get penalties, for example, it means they might end up in losses, or they might even end up losing their license, which means that investors can be surprised to say, well, this business was doing well, but now it's got no license and therefore it's got no business. So responsible investment tries to help investors to think through all the issues so that we can have sustainability in our returns. In other words, we can have some predictability of returns in the future.
You've brought in the concept of sustainability. What's the correlation between RI and sustainability? How do the two relate?
So in a nutshell, I think if we take about the physical environment, which is the environment in the ESG, environmental, social and governance, the key issue is this. If we've got a problem with the environment, for example, right now, as you can agree, William, most of the climate shocks that we're experiencing are human-made. So we've got climate change, which has got devastating impacts. If we don't take care in our decisions, in the investments that we make, in the companies that we run, to try to protect the environment, we're not going to be sustainable. That's why responsible investment is closely linked to sustainability, not just on the environment side, but even social. So let's take a company which is doing well financially, but it's doing well because it's putting waste in Moody River, for example. So they're not able to dispose of their waste properly because they feel that it's expensive, and therefore they just dump their waste into Moody River. How sustainable would that be? I'm sure maybe there will be some NGO that will come one time, or even the population around, to say this company is dumping waste in Mood River and therefore must be held responsible. From that perspective, we can clearly see the link between responsible investment and sustainability, both from a planet as well as from a business perspective.
Now, there are assertions, if I'm correct, that when an institution is guided by principles of RI, it reduces the scope, if I'm to use that word, of earnings of good returns, or simply put, profitability. What's your take? Is that anywhere closer to the truth?
I like that question. I think there's been a debate for years on this issue. But I think, to put it simply, let's just look at what we do when you're doing investment. You are looking at basically two things: risk and return. That's what you're looking at. You're trying to say, I need to get as much higher return as possible, but I need to manage my risk. So what does responsible investment do? Responsible investment helps us to manage the risk. So it reduces the risk. It is actually contrary to, I think, popular opinion that you're reducing your return. You're actually reducing your risk of this return so that your return is sustainable. And that's why I think there's billions of US dollars across the world where managers have deliberately implemented responsible investment strategies because they see the benefit from a risk management perspective.
Simply put, does sustainability and good returns coexist?
They do coexist. In fact, responsible investment helps us to achieve good returns for clients, for everyone, including the society. So yes, they do coexist, and I don't think in the future we can separate one from the other.
Let's bring it home and focus on Old Mutual. What scope would you give in as far as responsible investment and sustainability in Old Mutual or Old Mutual?
Yeah, so the context of this is that we launched our responsible framework in some years back. We took that initiative, and admittedly, I think locally there are no laws that require us to do responsible investment. So it's a deliberate internal initiative because we realize the importance of that, and especially when it comes to investment outcomes for our clients. Now, what are we doing? The first is to incorporate these responsible investment principles in our process. So when we're looking at an investment, we look at the financials, but also look at environmentally, what are they doing? Socially, what are they doing? And from a governance perspective, what is their stand? So if we are clear on these issues and on the financials, then we make decisions accordingly. But even if a company is doing well financially, if they're not doing well on environmental, social, and governance, we're not going to invest. We take a very different view because we believe that that's the only way that we can implement sustainable investment strategies in Malawi and help companies to appreciate that they cannot exist as an island. They exist in a society, and they need to take care of the society in which they operate.
Are there any examples or single out some initiatives or interventions that you can outline to say this is what Old Mutual has done this far in collaboration with its responsible investment drive?
Yeah, so we can pick out examples. So we embarked on a project which is one of the flagship projects when it comes to tertiary education. We constructed hostels at Kuhesi in Lilongwe, so the first phase. What we did was to look at, okay, how best can we use natural resources? And we managed to reduce the use of natural resources, whether it's energy and all that. And because of that, the building was certified as by IFCH, which means it's very efficient, using water, electricity, and even construction materials. That was a deliberate effort to demonstrate that this we can do without compromising any returns. So we are able from our financial model to see that we still get good returns, but at the same time we're able to use natural resources efficiently, just to give you an example.
Well, what impact, this particular example of course, but from a generic perspective as well, what impact has it brought about to, number one, business, number two, the community around?
So for us, I think as a business, is diversification. So it's helped us to diversify our investment portfolio. So that's number one. For the community, we're talking about students who literally are sleeping in the streets. That is a huge impact for them because now they can sleep in a proper environment, very secure. They can focus their attention on studies, not really being worried about whether their luggage, their possessions are going to be vandalized or stolen because they are living in these areas that are not conducive. So that's really the impact. And I think you're going to see the long-term impact because one would expect better graduates from these institutions because of the better living conditions.
Now, the rise in construction material has hit hard the real estate sector, where industry players project delay in most public projects coupled with a shift on budgets. Lately, there has been a rise in construction materials such as cement on the market on the back of foreign exchange scarcity. Speaking during an annual general meeting, one of the country's real estate players, Icon Properties, indicated that the rising costs have delayed projects such as Oasis Hotel, where it has a 60% stake. Justin Kweu brings us more.
Recently, consumers have been stunned with the rise in prices of cement, which the players in the sector of producing and distributing cement have attributed to a rise in cost of bringing raw materials as the country struggles with foreign exchange scarcity. The cement is just a component of how an ailing economy that is taking antidotes of recession has stifled the real estate sector. One of the players in the sector is the public listed firm Icon Properties, which has pumped 6.8 billion kwacha into the construction of a new hotel in Lilongwe by Blantyre Hotels BHL PLC called Oasis Hotel. Speaking during an annual general meeting for Icon Properties, one of the firm's directors, Graham Chipande, said their investment has amounted to 60% of investments on the whole project, but it has met numerous challenges, including the rise in cost of construction materials.
Our Oasis Hotel project is a very successful one. I think it will be a flagship project when you look at the landscape of Lilongwe and what we're looking to do within the tourism market. Obviously, we've been affected by the number of challenges. So you mentioned the challenges that we faced around the cyclone, but also the economic cycle that we're going through. So challenges in terms of being able to source foreign exchange have caused delays in the project. As you know, the majority of materials come through imports. The increase in price of construction materials, which are also largely imported, has caused us to kind of need to relook at the project and see how it is that we can be able to come back online so that we can deliver the right result for the shareholder, but also be able to complete the project on time. We're quite pleased with the progress that's being made in spite of the challenges that are there, and we're continuing to work closely with the project managers and the property companies that we're partnering with in that project to make sure that we deliver it as a success.
During the AGM, it was further revealed that in 2022, the company has registered a 92% increase in profit after tax to 16.7 billion kwacha from 8.7 billion kwacha in the preceding year. The positive performance has been attributed to revaluation gains of properties which were higher than the preceding year due to the impact of both accommodation space reconfiguration and increased rentals in the property market, which continues to recover from the adverse economic factors. One of the company's shareholders, Love Motinto, said even though the performance is satisfactory, shareholders are not happy with dividend payment, which, according to him, has increased with only one tambala.
My major concerns were about 3 or 2, if I'm not mistaken. I raised the issue of protocol, where the AGM and how the AGM is being conducted. The second one was the unsatisfaction of dividend payout. In this is a big one. This is a big concern that last year the dividend was lower, but this year it has only increased by 1 kwacha. After all that devaluation, after all the commodity pricing that we have experienced in the country, everything has gone higher. Every commodity now is almost unreachable. But the Icon company only produced results and pay out the dividend of 1 kwacha extra.
Is it 1 kwacha or 1 tambala?
I mean one tambala. One tambala. Yes. Personally, I see the future must be there. But the company has a lot to do in terms of marketing and promotions. This company is not well known to many Malawians. Icon, it's still a new thing. I often visit their website. I can see some little or no updates on the website. I don't see adverts in the newspapers. I don't see management and other marketing jungles in our national televisions. So this company has got capacity, but the marketing side or the promotional side is not yet there.
Icon Properties is among the 16 companies from different sectors listed on the Malawi Stock Exchange.
This Business Time magazine program brought to you in partnership with Old Mutual.
Ku Malawi timanena kuti chuma chili mu nthaka, ndipo izi ndi zoona. Zonse zimayambira pa Nazare pano. Timafuna kuti mtedza wa makademiya wa ku Malawi uzidziwika kuti ndi wabwino koposa. Tikakolola kwambiri timalembanso ntchito anthu ambiri. Ndimakhala onyadira kukhala nawo otenga mbali mu zimenezi.
Old Mutual is investing for the long term from the ground up. We call this creating mutual futures.
Welcome back. This is Business Time, a magazine program in which we bring you major business and economic news stories making headlines in the country, courtesy of Old Mutual. A mining development agreement between the government and Globe Metals and Mining Limited has shown that the country has obtained 10% stake-free entry equity in the Kanyika Niobium project in Mzimba district. The agreement, which Business Time has seen, further indicates that the government has an option to get another 10% through equity investment in the project. But are such percentage enough earnings for the country from its minerals? This is a question our journalist Kumwembe attempts.
Stakeholders in the mining sector are divided in opinion on the equity shareholding percentage that the government should acquire in mining investments in the country. This follows revelations that the government completed a mining development agreement with Globe Metals and Mining Limited in March 2023, which shows that the government will get 10% free carry equity. But what do stakeholders make of the development? Kosa Muntari is chairperson of the Natural Resources Justice Network.
I can start by sharing a model which is based on the shareholding. I'm so humbled because this is a model that we have advocated for it. A case in a point of one investor in Karonga where they have agreed on the shareholding principle to invest, to have for the community in that area to get 10% of what to be invested. And even during production, it is out of the whatever, if it's about 100 trucks for coal, for the let's say if it's mining for 25 years, then 10%, 10 trucks spent in the community. That has nothing to do with the CSR, corporate social responsibility. But interestingly, we also have the same provision now in the amended Mines and Minerals Act on the component of Community Development Agreement, we have still maintained the 0.45%. I listened to what the minister really responded or presented in parliament. I mean, during when he was responding, the 0.45% is from the annual gross sales revenue and not from the profits. So back to the question, I just wanted to give you a snapshot of other mining companies. They are to say, okay, the community must not be left. I've given an example for this company, which will, if they've been given all the documents, the licenses will be mining coal where there was Eland coal mine. Back to the question now, for Malawi, if we've been advocating for the win-win situation, the win-win situation can be 50-50. What we need to know as a country, as Malawians, mining is not, we have said this repeatedly, it's not agriculture, where tomorrow you go by. So the nation of where we've always been told that mining is still in its infant stage, even at that level, you need to have the share that befits you. So we need a win-win. We need a 50-50. That should be non-negotiable. And that is the only way which will really help Malawi to move to the middle income if mining is to be a game changer.
But Gren Malunga, coordinator for the Malawi Chamber of Mines and Energy, holds a contrary view.
It's not realistic because the companies are using their own resources to look for the minerals and to establish what quantities and what technology to use to recover those minerals, which government has not done in the past. And they cannot justify shareholding of 50-50 because it has done nothing previously to bring the mineral resources to production. It's enough for Malawi to benefit because they are getting something which they have not worked for. Although it's a resource that is underground, we never knew the resource was there. It's global that is discovered that resource. Therefore, you cannot say we should share equally.
Responding to a question on the same in Parliament recently, Minister of Mining Monica Janganamuno said the government is cautious of scaring away investors.
I wish to start by saying that Section 269, subsection 1 of the Prevailing Mines and Minerals Act, number 8 of 2019, stipulates that government has the right to acquire directly or through a government nominee without cost a free carry equity ownership interest of up to 10% in any mining project that is subject to a large-scale mining license. However, in the current Mines and Minerals Act 2023, that His Excellency the President, Dr. Lazarus Magathi Chakwera, has just assented to, the % free carry share equity has been removed. This gives an understanding that the question asked by the honorable member has been taken into consideration, in which the government and the investor can negotiate on the percentage that the government should have. However, it has to be noted that companies who invest in a country come with a profit-making mindset, just like any other business person, whereby if a that does not put its shares into the mining operations demands more shares, there is a threat that many companies can pull out of the contract.
Malawians can only wait for a time the country will maximize benefits from its mineral resources through meaningful investments in the sector.
Now, in other business news, one of the country's microfinance institutions, Select Financial Services, has reaffirmed its commitment to offering best and competitive financial services on the landscape. Webster Mbekeani is one of the officials at Select Finance Institution and caught up with a journalist, Kaonga Sabola.
What we've brought onto the market is a new innovation where customers who already have a loan with Select can roll over their loan telephonically, remotely, without having to travel. Obviously, they'll have to be assisted by a call center agent. So we've put in place a call center, which is based in Kenya, which is able to follow up with customers who would like to do a rollover of their loan or a top-up of their loan, and telephonically without having to travel. Previously, it was a hassle for our customers to travel. They would have to wait until the month end when the salary is in. Then they would take part of that salary to travel to where our agent is and to help them to do the rollover. They don't have to do that anymore these days with this innovation that we've put up.
Well, that story also brings us to the end of today's edition of the program Business Time, a magazine program in which we bring you major business and economic news stories making headlines in the country, courtesy of Old Mutual. On behalf of the entire production team, my name is William Kumwembe, but always remember, if it doesn't make money, then it doesn't make sense. Stay safe and goodbye for now.
Brought to you by Old Mutual. Creating mutual futures, your money invested for the good of all.